And now the last one we have is you line up Bitcoin and ETH, mean transfer volume per $1 in fees. What is this showing us?
Yeah, so this is kind of what I was referring to a little bit earlier. There's a lot of, especially on crypto Twitter or people that are coming into the space, they like to pit Bitcoin and ETH against each other. And I think it's really just missing the point in that they're two entirely separate things by far. Bitcoin is a global monetary asset. It's apolitical. It's a non-sovereign digital bearer asset that no one can manipulate, that no one can change. It's meant to do two things extremely well, better than anything before, and that's store and transfer value across the internet in a digital native way. Where Ethereum or other cryptocurrencies, as they're called, are smart contract platforms, or you can build dApps or DeFi protocols and all these sorts of other things. It's not competing with Bitcoin. And I think the framing in general by most people, especially in the crypto space, you log on to Coinbase 1 and 2, Bitcoin and ETH, and people say, what's better? What should I own? Is ETH going to flip in Bitcoin, without really understanding that the two markets that they're competing for are completely different. Despite maybe them competing for inflows because people download the Coinbase app, they're really just not competing. So what this is showing is essentially that, I just, in the previous chart, we showed Bitcoin's transfer volume per $1 in fees, and basically that settlement efficiency staying constant for the last decade with some volatility. And this chart is showing Bitcoin versus ETH in that regard. And so as Ethereum scales, as blockchains in general scale, with Ethereum doing NFTs, DeFi, dApps, ICOs, whatever the next thing that Ethereum or these smart contract platforms can do, it's in terms of it as a settlement network, a value settlement network, it's far inferior compared to Bitcoin. So for every $1 fees, Ethereum, the base layer, transfers $212 of value, with Bitcoin at $67,000 of value. And so I just think the framing is wrong in general. I get a lot of questions. I get a lot of DMs every day. What do you think about Ethereum? What do you think about Solana? What do you think about XYZ? And I think just in general, the total addressable market for apolitical non-sovereign money in the digital age is a few $100 trillion. And the value of a smart contract platform, or whether it's centralized, decentralized, or somewhere in between, and you can have that debate all day. I think it's just different. And I think it's a lot less, but that's just a personal opinion. So I think in general, the framing is wrong. And I think this kind of data is pretty interesting to look at.
Okay, so I got a couple more questions, and we're going to take some questions from the audience and my brothers as well. First one is 90% of Bitcoin has now been mined. We talked about it earlier on the show. What's your thought process there? Is that an important milestone, or it was 89.9% a couple of days ago, now it's 90. It's a round number. It sounds nice, but it doesn't really change anything.
Yeah, I mean, I think it's just pretty remarkable when you think about, especially just in 2021, all of the announcements and all of the news of new kind of capital flooding into the Bitcoin mining space. I don't know how many there are. I think 20 publicly traded miners in the United States. And you see these companies raising massive amounts of capital to invest to mine the last 10% of the Bitcoin supply over the next 100 years. And that supply issuance is the curve is front loaded. So you're going to see 5% of that, or around 5% of that Bitcoin mined in the next about 4 years or so. And so by 2030, I think it's around 99% or very close to it. But just in terms of how much capital, how much resources, and how much energy is going to be dedicated to mining this last 10% of Bitcoin issued, it's pretty remarkable. And it makes me FOMO and buy some more Bitcoin.
All right. The other thing is that we just saw while we've been talking, Lemonade, which is a publicly traded tech-enabled insurance company. They've added Bitcoin to their balance sheet. It's a very small amount. It's around $1 million or so. How do you think about public companies adding Bitcoin to their balance sheet? We've seen Michael Saylor continue to buy aggressively. Is this just a continuation of the trend, or do you feel like there's been some shift in sentiment among public executives?
Yeah, I mean, I think there's still, Michael Saylor is far ahead of the curve, and I think if you're watching this and are actively stacking Bitcoin, you are ahead of the curve as well. These companies and these corporations, these institutions, they move really slow. Michael Saylor has 75% of the voting rights at MicroStrategy. He can do what he wants. A lot of these companies, like Twitter doesn't even have Bitcoin on the balance sheet, and Jack was a CEO. So what does that say in terms of other kind of competing interests and just the information asymmetry? And so I think, that trend is going to continue, and it's going to pick up. But just in terms of allocating to Bitcoin from a corporate level, the accounting standards still are kind of unfavorable, where if Bitcoin draws down, it's a loss on your earnings. Some of these things, they will change in the future, but I think that the trend where you see pensions, you see corporate treasurers, you see insurance funds, just a small allocation to begin with. They're allocating for years, decades into the future, and I think that's just something we're going to see continue, but it'll take some time.